Brought to you by the Every Dollar app. Start budgeting for free today. You know, my name is Elliot. I graduated from a top 20, business school and college. After college I sold triple net investment sales for about 2 years, and then for the last year I've been a whole life agent that in Louisville. We partner with many different working class companies for discussion purposes. The average American retires at about $5,000 in their bank account. Personally, I tell my friends and family, to cash out their whole life policies, and the way I pitch whole life, it's not necessarily as an investment vehicle, but more so as a savings or a savings account, but simply as insurance that accumulate cash value and a paid up coverage over time. In my eyes, I believe I'm leaving my members better often before they talk to me. But why am I doing something so horrible in your eyes? Well, because the product is crap, not because you're a bad guy, but the product that you're selling. You're trying to do a good thing, Elliot, and thank you for doing that, and I appreciate your heart, but basically, I mean, it's a math problem. So if you take a $200 whole life premium per month, I can buy the same amount of term insurance on that 30-year-old for about $10, so the other $190 would go towards cash value in that typical policy. The top 10 stock companies out there, okay, that's the actual data that's out there in today's market. And so if I'm paying $190 extra for the life insurance in order to create a savings account, that's not the end of the world, but it's the rules of the savings account that are the cash value. We'll call it savings. You said we're using it as a savings vehicle that are the problem. The typical whole life policy accumulates zero cash value in the first 3 years. Have you noticed that? Yeah, I'm that. Okay. So it's called what we would with you and I people in the financial industry like you, me and George, we would call that front-loaded commission. Agreed. So I have a savings account that I'm putting $190 in my example in per month, and the first 3 years I get zero. It 100% goes to the bank, goes to the life insurance. Okay, after that the typical whole life policy accumulates at a 1.2% rate. Some of them go as high as 3 or 4%. Some of the universal policies will go as high as 4 to 7%. Some of the index to universal policies that are indexed to like an S&P after fees will go as high as 7 or 8% rate of return. Yeah, okay. Yeah. But the typical basic whole life policy, not a universal policy, is accumulating at under 2%. So I have a savings account that for the first 3 years I put money in it, they keep my money. After that, when I finally start saving, it accumulates at 1 to 2%. And here's the thing. Okay. Now, what would be, you say, Elliot, in your case? The typical size face value of policy that you sell is what's a normal policy for you? It's gonna vary from someone who's 18 to 70. Okay, so but I mean you're south. They're selling. Who's your typical customer? Let's say you had a 30-year-old. What would you typical customer is Joe. He works construction, and so he's probably not doing a $200 a month premium like I'm using as an example. Then no, for me, I've never sold a $200 a month premium policy. So probably more like 100 on average would be more like between 50 and 70. Okay. Alright. And so these are $50,000 face value policies, right? Yeah, or less. Yeah, okay, so they're small policies. Would you agree with me that a guy that makes $40,000 a year and dies $50,000 is not enough to take care of his family? It correct. It's not enough to take care of its family. If you wanted to replace a $40,000 a year income, you would need north of $400,000 invested at 10%, correct? And I would say it's better than nothing. That's better than nothing. But for the same money he's spending, he could have bought the right amount of insurance if he bought term right. And the funny thing about term too is I talk to these people when they hit the age of retirement, and they're like, yeah, I paid in this life insurance my whole life, but then I never used it, and they're so upset with me about it. Yeah, and now they're not upset with you. You haven't been selling long enough to meet anybody that kept it till retirement. You just started, but that they could be upset with the industry maybe, but that I haven't had that problem. Because here's the thing, if you take the $10 a month and you bought in our, let's drop it to $5 a month and call it a $70,000 policy. Yeah, after let's go back to our savings account. I was using 190 a while ago. Now I've got to drop it down to about 95 because I'm $100 policy. Okay, now we're gonna do that. That $5 is covering the insurance, 95 is going into the savings program, 0 for the first 3 years. After that it's accumulating at 2%, and after that if it builds up a cash value of $5 or $10,000 after 10, 15, 20 years, right? Yeah, okay, right. They die with a $60,000 whole life policy with a $15,000 cash value that they paid extra to build the cash value with a $60,000 whole life policy. Would you agree with me that the insurance company is going to send them a check for $60,000? Only the $60,000 exactly. So you paid for a savings program, and when you die they keep your money. Yes. Yeah, nice parting gift. That's why we think it sucks, man. It's 0, 100% is kept for the first 3 years. After that it's accumulating at a lousy rate, and when I die you keep my money. I paid extra beyond term to get whole life, right? To get a whole life policy that has a savings program in it, and my savings program when I die doesn't go to my family, it goes to the insurance company. If I opened a bank with those terms, the bank would go broke. No one would put savings in there, so it's not enough to actually cover and replace income, and you don't actually get the cash value when you die. I'm confused. The only thing that I will say I think a problem that it is helping is that people do only retire with about $5,000 in their bank account. Well, that's because they bought this crap. They didn't have any money to invest because they gave it to you. Put the $95 in a Roth IRA. They would retire millionaires. Yeah. But I don't think I'm putting a policy in place where it's like that, uncomfortable, where they didn't have enough money to invest on top of that. Like why don't they use the money to invest wisely? If I showed them an investment calculator and I put the same amount in there, they would be flabbergasted and they would be running far away from this. If I bought term life insurance and wasted all that money for my whole life and ended up a multi-millionaire as opposed to insurance company keeping my savings that I paid for, I don't think anybody's gonna be mad about that. It's like telling someone, Dave, this show is great. In season 12 it gets good. You can get through the first 12 seasons of this show. I promise it'll be mediocre at binging that. No. Thank you, Elliot. I think you're probably a good guy, but I think you're probably, if you keep doing the math on this, you're gonna probably end up doing a different type of financial planning that's more beneficial to the folks you're trying to serve. This is the Ramsey Show. So if you look in the skyline of the typical mid-sized city, the towers in the skylines, particularly 20 years ago and before, it would be two things: banks and life insurance companies. Santa Claus did not build those buildings. You did. Your money went to them. You chose for it to go to them. They didn't steal it from you, but their products are so profitable to them, not to you, that they own the skylines. Don't you just wish you had the bank furniture? They got the best furniture. So when we talk to a young man like Elliot who's selling whole life insurance, or an old man or an old woman the selling life insurance, whole life insurance, we find the only people that believe that rhetoric, that line that we just covered with him. And honestly, to his credit, I think he truly believes he's doing good. There's two types of whole life insurance agents as far as I'm concerned: the ones that understand they're screwing people and the ones that don't, and he's one that he doesn't. He really thinks he's doing a good thing, and so, but I have done a lot of enthusiastically stupid things too, by the way, folks. I'll help you with this. You get screwed way more often by enthusiastic ignoramuses than you do actual con men. There's not that many actual psychopaths out there like a Bernie Madoff. There's a few of them, but your friend who's trying to talk you into Bitcoin is an enthusiastic ignoramus. They're not con people. They're probably even the little fried kid that is going to jail or whatever. Sam Bankman-Fried, he might not even be a real crook. I don't know. I haven't really looked at the details of that. He might just be a massively enthusiastic ignoramus, you know what I'm saying? And so really what you've got to do is you have to follow the money and be a fruit inspector. What's the fruit of the products? When we talk to multi-millionaires and millionaires, we don't find them using payday lenders, rent-to-own, whole life insurance. We don't find them using rip-off finance products, financial products. They have avoided those things, and it's one of the secrets that causes them to be wealthy, and that's really where this stuff breaks down. And so I have really good friends that used to sell whole life insurance, and once they actually, because I just pound that crap out of them. But I mean they finally just like I get it and I can't sell it anymore because I have a conscience. You know, if you have a good friend that is a payday lender and is ripping off poor people at 800% interest, that's called oppressing the poor. You do not want to read in the Bible what God does to people who oppress the poor when you mess with the poor on purpose, screwing them, and you mess with widows and orphans. You don't want to be on that list in the Bible. It's not a good list to be on, and so you don't want to be on the wrong side of a financial product and be justifying it. Well, it's better than nothing. No, it's actually not. You be better. I'll put your money in a fruit jar. Create your free every dollar budget today, the simplest way to budget for your life.